this year, 2024, we expect oil demand growth to be significantly weaker than last year, 2023. The increase we expect about 1.2, 1.3 million barrels per day, mainly as a result of the slowing down of the economic growth, China, but elsewhere, and also electrification of the transportation system, more electric cars coming in the picture. This is on the demand side. On the supply side, the growth coming from Americas, namely US, Canada, Brazil, and Guyana, this growth, to put all together, is more than enough to meet the global oil demand growth. So in the absence of major geopolitical turmoil or major extreme weather events, we would expect rather a comfortable oil market and comfortable moderate price evolution throughout 2024.
Okay, moderate price evolution throughout 2024 because that supply is there, as you say, from the Americas, but demand is going to be softer. And, of course, you make that key caveat around geopolitical risks. Does that give us some comfort when it comes to the question of inflation, Fatih? Do you think that we are past the big concern, at least around the resurgence of inflation when it comes to the energy component and the energy mix in that inflation story?
Yeah. So, at least what I can say, if there are no geopolitical escalation in Middle East, we are seeing a tension growing and then again reducing. And if we don't see any extreme weather events in North America and elsewhere, I would say that the oil prices remain at around current levels would help the inflation not to further increase. So as such, it would be a good news for the global economy, especially in the emerging countries.
Fatih, it's Kriti Gupta in London. OPEC Plus has time and time again talked about physical tightness in this oil market, and it's that physical tightness that helps them kind of regulate some of the oil prices to perhaps a lot of the consuming economies kind of demise, to be completely honest. Talk to us a little bit about whether the United States, that extra supply that you touted, distorts the oil picture. Are you concerned at all about oversupply from the U.S.?
No, I think the growth coming from the United States is welcome for the oil markets because, as I said, the demand is weaker than last year, but still significant, 1.2, 1.3 million barrels per day. And the U.S. bringing a significant amount of oil is a very good news for the consumers, for the global economy, for inflation, as well as coming from Canada, Brazil, and Guyana. The Americas altogether cover the global oil demand growth and put a downward pressure on the prices and reduce the room of maneuver for the countries who want to control the oil production and consequently the prices.
Is this a good time, though, for that to actually happen in the context of some of the tensions we're seeing in the Red Sea? Several oil tankers being hit in that part of the world, in addition to longer fuel times, more labor. Fatih, when do the Red Sea tensions show up more aggressively in the oil price?
I think currently, when we look at the picture in the Middle East, we don't see any of the major producing countries are affected from those tensions, and the transition routes becoming longer. They may have some marginal effect on the prices. My worry is if we see one or more than one major oil producing countries is directly involved in the current crisis, and if we see escalation of the situation, this may well definitely push the prices up, and this will be definitely not good news for the global economy.
And certainly that is a risk, no doubt, that OPEC Plus are factoring in. They have their cuts coming through till the end of March. Are you seeing compliance with those OPEC Plus cuts in terms of the output, Fatih? And do you expect OPEC Plus, that cartel, to push out those cuts further into the year?
So I think by and large, there is a good discipline there when we look at the numbers, and what they are going to decide for the next steps is, of course, up to those countries. But as we discussed a few minutes ago, the inflation is a major risk for the global economy.